and this is what this is a saying that I like to repeat and use, and part of our teaching is, and that's this: a rising tide floats all boats. So, in business, let's stack the deck in our favor. We want market areas that are in demand. We don't want to be pushing anything onto someone. We want to be having product that people are already looking for. I don't care what business you're going into. You want to be marketing something that people there's a high demand for. I mean, it takes a lot of the work out of it. And so that's what we're going to do. We're going to start your business where your product is in demand. And again, your product is small apartments. This is incredibly important for flipping. If we're going to be flipping properties, it'd certainly be nicer to have a product where everybody's looking for my product to flip to. It's very important when you get into buying, holding, and rehabbing. I say this because in flipping, really, you have no exposure. You're in, you have a property under contract. If for some reason you don't find a buyer, you exercise your exit clause and you're out, and you have nothing at risk. If you're buying and holding a property and a market turns on you, then you can get stuck holding the property, and it can go from being positive cash flow to negative cash flow. And so that's why I say it's very important to understand the market dynamics when one of our intentions is to buy and hold. Also, we want areas that are in demand because we want to have access to buyer investors. If there's an area in demand, that means there's people lining up to either buy property there or it's easier to find investors to invest in property that you want to hang on to. So for all these obvious reasons, we want to find a strong market. Now, ideally, you want to start in your own local area or vicinity. I say with local, I say within a 1-hour driving range. One of the reasons, it makes the mindset portion easier. There's not a business reason why in success, we're going to stack the deck in your favor by ideally having you work in your immediate vicinity so that you can feel like you can see the property. You can lay your hands on property. Not that you have to. No, you don't have to. But for people that are starting out, and I get this, and I'm the same way, people starting out, I want you to have a comfort level. It's especially true if you're going to be starting off with buy and hold or doing rehabs. If you're brand new to the business and you're going to be buying your first property to hang on to or do a rehab, I do want you to close proximity to that because I do want you to be able to lay your eyes on it and see it and make sure things are okay. But I will tell you, it's not required because we've had many students do deals across state lines where they really wasn't even within driving distance. I've had students in their first deal in California doing deals in Oklahoma. I've had students in Indiana doing deals in Ohio. I've had students in Kansas doing deals in Ohio, in Chicago doing deals in Ohio. By the way, so you got to think of a trend. I don't know if we have people from Ohio here, but Ohio's really active right now. So, I don't know where each of you, I guess I can look it up, but I don't know where each of you live other than I know that one of you is in New York City. And, if you want to draw a 1-hour drive radius, that could be your local area. But I don't want anyone feeling like, well, if I can't do it within a 1-hour radius, I can't get started. No, because you can flip anywhere. You can wholesale anywhere. You don't need to see a property to wholesale it. But if you're going to be buying and holding, I do want you to be able to lay eyes on it. I do want you to be able to lay eyes on it, routinely lay eyes on it. So that's general preference number one. Another preference is we need to have areas with some population. And I think this goes without saying. People say, how much? I used to say 25,000, 50,000. You got to have at least 50,000 people in an area. Otherwise, there's not going to be enough supply of product. There's not going to be enough demand. There's not enough economy off. So minimum 50,000 population. And it needs to be an area we have lots of Class B and C apartments. Now, for those of you, who did the outside learning assignment. You learned about class of properties this week, A, B, C, and D. A is your new stuff. You're not going to find, I mean, very rarely you're going to find a good A deal. The reason is A's haven't been around long enough to be mismanaged long enough to put them into any kind of distress. So your deals are going to be primarily B's and C's. Low B's, high C's. But you never do D's. Never, 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 never do D. D means don't do it. D is the war zone stuff. I don't even want you to even get involved in flipping D. You know, I can make a strong argument that, you know, eBay can flip a D, and you can. But I don't want you to mess with D. I want you to mess with D. It's a different buyer. You're buying a D. I want you to focus on B's and C's. The other thing I want you to have as general preference for a market is lots of management companies. Because somebody has to manage these things, and I don't want it to be you. So you need to have management companies who specialize in small apartments, because a little bit later tonight we'll talk about this is going to be one of the criteria we have, that whether you're looking to flip or you're looking to invest, you're going to need a management company. Even if you're flipping, your end buyer is going to ask, who's the management company? So you've got to at least be able to refer someone to them so they have a passive investing experience. Again, avoid Class D. Now, there's one more set of general preferences that I want to share with you before we start drilling down. These are just, I'm at 30,000 foot still right now. 30,000 foot in terms of looking at markets. I'd like to have a market where there's lots of single-family home landlords that I can access to market my deals to. Especially if I'm going to be finding fourplexes and duplexes and fiveplexes to flip to single-family home landlords, I want to make sure I can get access to them as a group, like a real estate club or any other clubs. Of course, you can always buy a direct mail list and do it. But if I can get in front of a group or put a flyer out at a monthly meeting, I like that. Makes it pretty straightforward to make my message out quick and in mass. So how other ways to get access to single-family home landlords? Well, here's one way. You're looking for areas, cities, towns which have a housing authority. If they have a housing authority, that means they have Section 8 vouchers, which means there is a place where single-family home owners who advertise for Section 8 residents will put themselves into a spreadsheet. Sometimes it's online. Sometimes they'll send you the spreadsheet. It's in a book. Anyway, you can get a list of single-family home landlords for free from the housing authority, and then you can be flipping deals to them. Real estate club, I mentioned that. I want you to find a market that has a real estate club, because that means there'll be potential buyers there. That means there'll be potential investors there for your deals. My very first investors came out of a real estate club. They were IRA investors, self-directed IRA investors. I met through the real estate club. Now, the other reason you want to have a real estate club, especially if it's in your backyard, is everybody at this call should be a member of a real estate club, because you need that for your community, support your mindset. Another thing we're looking for in a city or an area is apartment associations, because that's going to give you access to other apartment owners. Through the contacts of an apartment association, who's there? Well, management companies, agents, owners, vendors. You can get access to owners list through apartment associations to be able to access as part of your marketing efforts. And then another category of general preference I have for you is if you're working in an area, especially if it's your local area, anybody that has regular networking groups with self-directed IRA holders is a bonus, because that's where you're going to draw your investors. One of the areas you're going to draw your investors, and you may draw some buyers out of there as well. Now, I'll tell you right now, if there's not an IRA networking group, then make sure you're in the real estate club, because they're in that group. They're in that group. Self-directed IRA holders. They're going to be your investors.